Hello, this is Chad Bergman with Movement Mortgage, based in Littleton, Colorado. Today, I have the privilege of interviewing Jordan Goldberg, and he has a wealth of knowledge regarding credit. We're going to go through about six common questions that come up in the mortgage process. Hearing from the expert and understanding again how we can improve our credit situation, do's and don'ts throughout the mortgage process. Well, Jordan, thank you again for joining me. Can you tell me a little bit about yourself and your company?
Yeah, absolutely. Hey, thanks for having me, Chad. Always glad to jump on these education series and share some knowledge and helpful tips with folks. I've been in this industry. You could call it credit reporting. You could call it the mortgage industry, real estate. But I've been doing this for about 30 years. Love what I do. Super passionate about it. Had a relationship with the team at Movement Mortgage for going on. We're going on 8 years now, almost 9 years. So love working with the Movement team and love helping people qualify for a mortgage and buy a house. The company I work for, Credit Plus, we are a credit reporting agency. We've been doing this a long time. We've been around since 1928. We're not a credit repair company. I always like to let people know right out of the gate, this is not about credit repair. It's about smart credit education. And we've been working, like I said, we've been working with Movement for 8-9 years. And we're going to just answer some of the common things that come up, questions that your clients ask you and questions I get asked all the time, and see if we can just give people some helpful advice.
Well, perfect. Again, credit is king, I say. It is so important in the mortgage process. Some of the common questions, again, let's knock them out. So a big one that comes across is, how do inquiries affect my credit score?
That is probably one of the number one questions we get asked, right? People, don't pull my credit, right? So, here's the thing, it's got to be done, right? It's part of the process, and it has to be done. And I tell people all the time, just, don't worry about it, right? Usually there's something else that could be a concern on your credit besides the inquiry. And the really good news is, the score model developers, right? The main player, the one we use for mortgages, is called FICO, or Fair Isaac and Company. And they realize that people may shop around. They may look for, the best deal possible. And rules were put in place many, many years ago so that if Chad, if you pulled credit on a borrower today, right? Maybe they talked to one or two other mortgage companies last week. I'm not sure why they would do that, right? They should just go right to Movement. But that would be 3 mortgage inquiries, right, in the past week. Well, that only counts as 1 hit against your credit, right? So FICO would say, hey, keep your shopping within a short period of time. You may see online where they say 15 to 45 days. But really what we try to focus on is a 30-day window. All right. So if you pull credit today, any mortgage inquiries within the last 30 days, that just counts as 1 hit. And really, in the grand scheme of things, how much does it actually impact your credit score? It depends, right? It varies case by case. Sometimes it'll have 0 impact. Some people, it may be a few points. Someone, it may be closer to 10 points, but it's case by case. At the end of the day, don't be afraid to have your credit pulled for a mortgage, because it has to be done.
That's super helpful. And again, I've told my clients too, you have that shopping window for credit. And again, it's so critical, again, to just have all the facts. And again, the concerns, there's a lot of miscommunication out there. But again, it's good to know that you have that window, and to not avoid having your credit pulled, to talk to the right lender.
And one thing you will notice also is, if you or anyone that that's watching this video, if you look online and you look up what the credit score looks at, what factors, right? The pie chart, it'll be broken up into 5 pieces, and you'll notice inquiries don't show, right? New credit counts for 10% of your credit score, and inquiries are kind of baked into that 10%. So you won't see inquiries as part of the FICO score pie chart.
Perfect. Just reaffirms kind of, again, what I've been hearing, but it's just hard to get that information out sometimes.
Sure.
Utilization is something that comes up in my world. Could you explain what utilization of credit is and how it affects your credit score?
Sure, and that's the new term for everybody to learn today. Utilization ratio. What we're looking at is the balance on an account versus the original loan amount or your credit limit on a credit card. All right, and we kind of look at things cumulatively. And one of the things I like to focus on here is the utilization ratio, the balance on your credit cards, which we call revolving debt, that carries more weight than the balance on maybe an auto loan, a student loan, or even a mortgage, right? Which we call installment debt. Installment debt, you have a set payment every month for a set number of months or terms. Credit cards, right? Your minimum payment will vary, based on the balance you carry on that credit card. But at the end of the day, the utilization ratio, we try to keep that as low as possible. The lower your ratio, the higher your credit score. And a good example is if I had 5 credit cards with a $5,000 limit on each, that gives me $20,000 in available credit. If I'm carrying a $5,000 balance between all 4 of those accounts, my ratio is at 25%. I mean, that's great. Could it be better? Sure. For maximum credit scores, we want to see that utilization ratio on credit cards below 10%. But a lot of people carry credit card debt. We see that's common. One of the easiest ways to improve your credit scores to pay down the balances on credit cards. But if your utilization ratio is above 50%, you've kind of crossed into, it's not really the danger zone. You're not maxed out, but we really want to see that ratio as low as possible. Try to get it down below 30%, get it below 25%, or to maximize those scores, get it below 10%, but not zero. Zero balance on credit cards, you would actually have a higher credit score if you showed a low balance on one credit card as opposed to having a zero balance on every credit card.
Wow, I had no idea.
See it every day.
Okay.
Simple fix too. I love when that happens, when somebody reaches out and says, "Hey, how can I get the I need 1 point on this on this borrower," and the simple fix is every credit card shows a zero balance. We say, just go buy something, charge a tank of gas, or buy your spouse a present. Everybody's happy.
And that's what we're here to do. That's great. Yeah, again, it's that little bit of information and being prepared for pulling credit and trying to optimize those scores.
Sure.
Something else that comes up is authorized user. How does an authorized user, sometimes we co-sign for, say, a spouse, a child, how does that affect our score, whether we are the authorized user or we're the account holder?
Sure. Great question. Again, we get asked about that all the time. The first thing I'll differentiate between is co-signer versus authorized user, right? If you co-sign on a loan or you have a joint credit card, right, you're equally responsible for that account. Whereas an authorized user on a credit card, that's somebody that can make purchases, transactions on a credit card, but they're not responsible to make the payment, right? So like in my household, right, with my kids, as they got older, teenagers, and started to drive, right, I would make them an authorized user on my credit cards, right? So they would have a credit card where they could, buy gas, or as it comes up, if they need to use it, but they're not responsible for the payment, but that credit card does report on their credit report, right? So me being the responsible party, I better make sure that I make all the payments on time. I better keep a low balance on that credit card, right? Low utilization ratio we just learned about, because it shows on my kids' credit report. Now I can remove them from the account and it will no longer show on their credit report, or it will show it as a closed account. But it does show as a trade line on my children's credit report, because they're an authorized user, and it does impact their credit scores. It can be a good thing. Right? In my situation, right, I make it a good, positive trade line for my kids. But, there are cases we see all the time where somebody's an authorized user on a credit card. The responsible person maybe maxed out that credit card, drove the utilization ratio up. That can hurt the score. Maybe they made late payments on that credit card, and now the authorized user is being penalized. Their score drops because of the late payments. It's a simple solution for us to fix. We can usually get the authorized user account removed from somebody's credit report. There's processes for that. But at the end of the day, just know if you are an authorized user, or you have people on your credit cards as authorized users, it's going to show on all parties' credit reports.
Great explanation. Again, doesn't come up a lot, but no one really knows how that authorized user account reports, and it could, again, hurt or benefit.
Yeah, I
Wonderful.
mean, we see it. It's like, a third of the time it helps. A third of the time it has no impact. A third of the time it can hurt somebody. It's a very common thing. But another note about it is, in order to get your own credit card, you have to be 18, right? So really, a good way prior to being 18, right, a good way to establish credit is to be added as an authorized user to somebody's account. Just make sure that the account is in good standing, low credit or low utilization ratio, and you'll get all the benefits there.
Awesome. Perfect. Thank you. Another question that comes up quite often is old accounts. Again, we have them. We have those credit cards that we open, but again, we're not using. And at the end of the day, should we keep those open or should we close those old accounts?
Yeah, yep, another great question. And the first thing you really want to consider there is how will it impact your utilization ratio, right? Going back to my scenario where I had 4 credit cards with the $5,000 limit, right, giving me $20,000 in available credit, and I was carrying that $5,000 balance, so my ratio is at 25%, which is a great place to be. But if there's 2 credit cards I don't use anymore and I decide to close them, right now my available credit dropped to $10,000. I still have the $5,000 balance, so my ratio just shot up to 50%. Right, so you always want to look at how will it impact your utilization ratio. And another thing to look at is one of the things that impacts our scores is length of credit history. Right, so if you have an old credit card, right, that you've had open for 10 years and you're thinking about closing it because you don't use it anymore, you have to also look at the rest of your accounts, the ones you do use, and are any of them just as old or near as old, right? Because you don't want to have that length of credit history impacted, right? We like to see that you've had credit for a long time. So I just tell people all the time, the more length of history you have, the more pages of credit you have, the less it will impact you by closing an account. Whereas if you're, somebody new, recent college grad, somebody new getting established with credit, maybe you have a year or 2 years under your belt with credit history. Now you really have to be careful because everything you do will have a more impact on your credit scores. So at the end of the day, when you're deciding about closing an account and you're unsure, that's when you really want to reach out to Chad, or the person you're working with and ask before you take any action.
Thank you so much. Again, it seems so common sense, but again, it's different for everyone. So thank you.
Sure.
Something that comes up often is, again, we all have bumps. We all have, again, something that may negatively affect our credit. Collections come up frequently. Some collections people don't even know about until their credit is pulled. And a common question I get is, if I pay off my collection, will it go away, and is it going to help or hurt me?
Yeah, great. That one I love, right? Because this is a scenario where we get asked about it, or I really hope we get asked about it before someone takes action, because the action you take can really play good or bad on your credit score. So here's the skinny on it, right? Collection accounts, the mortgage credit score, right? It's been around since 2004. Right? It's going to be 18 years of using this same credit score for mortgages. This particular credit score counts collections against a borrower. Doesn't matter if it's paid or not paid, medical or non-medical. This version of the credit score will factor the collection against the borrower. And what really matters is how many collections do you have and how old are they, stuff like that. So when you decide if you're going to pay it, right, that's a tough path, tough decision, all right? But you really want to follow some solid advice here. Because if you were online and following some of the popular websites out there for consumer credit scores, I'm not going to mention them here now, but sometimes if you may pay a collection account and your score would go up, right? Your score would be, have a positive impact by paying that collection. But in the mortgage world, remember, our score will still count it against you, paid or not paid. So the process that we usually follow is, and what we call it is pay for deletion. I always tell people, hey, if you have a collection account and you're in position to pay it or required to pay it, to proceed with a loan, you need to ask that collection company, hey, if I pay you, will you delete it from my credit report? Many times they will agree to do this. All right. And you want to get it in writing. Typically they'll send you a letter that says, hey, we instruct the credit bureaus, to delete the account, or we have asked the bureaus to delete the account. Right. They won't do a bait and switch. There's too many eyes on them watching them. So if they want to stay in business, they can't do bait and switch on you. So if they say they will delete, feel confident that they will follow through on that. And you always want to have that letter in hand. And something that a lot of people don't know, all right, like in this market now where it may take a long time to find a house, right? You want to buy, but, inventory is low, it takes a long time to find the house, or you're doing new construction, right? Chad may pull your credit today, right? And now, 5 months go by, 6 months go by, you finally find a house, or maybe the house you're having built is ready. Well, the credit report is expired. Chad has to pull a new credit report. So when Chad originally pulled your credit report, you could be at a 700 credit score and great, everything's good. But in that 5-6 month time period, that went by waiting for the house, let's say a $50 medical collection popped on your credit. That'll drop your credit score 100 points. You'll go from 700 to 600 over a $50 medical collection. And that's huge. All right. You may no longer qualify for a loan. All right. So the good news about collection accounts is collection companies have to wait 180 days before they can report it on your credit, right? So if you do have debt turned over to a collection company, maybe it's a doctor bill, a hospital bill, something that you thought insurance was going to pay for, that collection company, they'll try to collect the debt, but they can't report it on your credit for 180 days. It gives you time to work it out with them and hopefully get it resolved, before the 180 days passes and they put it on your credit. But if it hits your credit, be prepared because your mortgage score will drop 100 points overnight.
Wow, that was a lot of content all about collections.
Sure thing. Yeah. I could talk about this all day.
Oh yeah, well we may have to revisit that one because again, it comes up a lot.
Sure does.
And again, people usually it's usually last minute. So again, qualifying for a mortgage, what does that look like? And then I didn't know this existed. I definitely appreciate the pay for delete, because I had another client that did the same thing. She got a deletion letter. It was a $80 bill she didn't even know about, but it's going to bring her score up about 60 points. So nice. She's totally ecstatic, and again, just giving her that information. And we have the time, so that's the key, is we have a little bit of time to work that out.
And one other thing I'll add to that too is, if you did have a collection account, let's say it's been sitting out there for 3-4 years and you've ignored it, or just on principle, I'm not going to pay that. But then as part of the loan process, it was required for you to pay it. Something that a lot of people don't know is if you just forked over, in your case, if you fork over that $80 and pay the collection and then ask for deletion, so now it shows on your credit report as a paid collection account. Something, it's kind of a flaw in the system, but it is what it is. That collection company, right? Originally, it was looking like a 4-year-old collection account. Now that you pay it, they have to update with the bureaus to show that it's been paid. And what we see happen a lot of times is it really looks like a brand new collection account. And instead of, your score can actually go down, right? We see it happen a lot of times where you kind of reset the clock on a collection account and make it look like a brand new collection account because of paying it off and causing recent activity. So, just be careful there. Again, that's where you really want to talk to somebody, that has the knowledge and knows how these things will play out to make sure you're making the correct steps there. Yeah,
good point, Jordan. That's come up many times about, again, paying off an old collection. Is it even necessary? Most of the time it's not for lending purposes. But the report date, bringing that report date current can definitely bring down your score temporarily. So our last question that comes up is disputing trade lines. Again, people don't know that they can maybe do it. Is it a good idea, bad idea? How does it affect your credit score?
Yeah. So again, we're wrapping up here on a great topic. And again, this is one where I can ramble on, but I'll try to just keep it short and sweet on this one. If you want to apply for a mortgage and you have accounts in dispute, you can actually be slowing down the process and working against, getting a mortgage. There's legitimate reasons for disputing information, right? There's errors and inaccurate information on credit reports every day. And the sad truth is we as consumers are responsible, to check our own credit report. We have to look, make sure it's accurate, make sure there's no errors, and if you do see something that's incorrect, the process is out there to dispute the information, open up an investigation and have the bureaus look into it, hopefully get the correction made. All right. And they have typically 30 days to respond to that investigation. On the flip side of it, though, is we see a lot of people dispute stuff just for the sake of disputing it because of that investigation process, forcing the investigation to happen. And let's say if it's a collection account and you just say, it's legit, but you just decide to dispute it and open up the investigation. Now the creditor has to provide proof that it's legitimate. And it may take them time to find the proof, right? It may take them, 6 weeks to find the proof. But if they don't respond within 30 days, right, the account can come off. So we just see stuff like that happen where people go down that path and they create a lot of unnecessary, work on files, right? At the end of the day, if you dispute an account, right, it does not factor into your credit score at 100% weight. Okay, so we don't really know what are you disputing: a late payment, the balance, the account, saying it's not yours, it's not legitimate, stuff like that. So if there is a dispute comment on an account, we're not really seeing your true credit score. So the lender, the underwriter, may come back and say, hey, we want you to remove that dispute comment from the account so we can see your true credit score, right? And a lot of times what we see happen is your credit score goes down, right? The dispute comment is removed, score drops. Now we've got another can of worms, where now we have to look at ways to improve your credit score. Credit repair, it's out there. People utilize it. I'm not going to say, is it good or bad? I won't even get into that discussion. But usually what happens with credit repair is they just look for negative items on your credit report, and then they just start disputing them and then trying to work the process, the flaws and loopholes in the system to where creditors have to prove the account in a short period of time. Otherwise, it gets deleted from your credit report. So, a lot of stuff goes in there, and maybe we can revisit this another day. But I would just say, if you are considering disputing accounts on your credit, why are you doing that? Is it a legitimate dispute or not? If that information is accurate, if you truly paid late or you truly had a collection account, then it should be on your credit report.
That's a ton of information, Jordan. I appreciate it. Oh my gosh. Yeah, disputes again don't always come up, but you just don't know. And again, the inside track is you just need to have an honest conversation with a trusted advisor because everyone's different.
Thank you.
Again,
I appreciate it. I love having the opportunity to do this. It's something, again, you can see I'm passionate about it. I want people to make the right moves. I want them to, when they come to you, right, to be what I call, buyer ready,
right.
Not have any issues. And that's the thing. It's really nice when you hit that order button, for a credit report, and it comes back with, the scores you're looking for and hoping for. And when you see that, that I really like everyone to be in that situation. And I can kind of wrap up here with, credit is just a snapshot in time. Okay. No matter what your situation is, right? Things happen, like you mentioned earlier. Life events happen, and our financial decisions and our life events can impact our credit and our credit scores and our ability to get credit. But the good news is, you can fix it, right? Pay your bills on time. Keep your credit card balances low. If you have collection accounts, deal with them. See if they'll delete them. I see people go from the mid 500 credit scores, to the mid 600 credit scores in just a few months. And then take another few months and you'll be in the 700s, right? So it's something that you can address, you can fix it, and we see success for people all the time.
It's a great summary, Jordan. So again, I really appreciate your time today.
Sure.
Again, looking forward to many more happy clients. Again, this is Chad Bergman with Movement Mortgage. You can reach me at 303-875-2240 or mydenvermortgage.com. So again, have a great day, and thanks again, Jordan.
Thank you. Take care.
Okay. Thanks.